Hey everybody, it is January 18th, and this is Anthony from Traders Ultimate Edge. Let's look at the markets today. Today, in our day trading room, I went 6-0, scalping the ES. Well, actually, I was scalping SPY options. Watching the ES chart though, and the question is, how do you do that? Well, the question is, or the answer is, technical analysis and good indicators. You'll see right down here at the bottom, we've got our new volume indicator. Tells us where the volume is headed. This doesn't work on price action. This works on volume. So if we know the market's looking bearish, then you can comfortably short every high, right? And in fact, that's a lot of what we did today. So you can see, let me first give you kind of a view of the markets. Let me zoom out here. All right. Right here are the two trend lines coming up that I was talking about, that the market was going to have to hold. And it was right here, okay? And this is right where I said it doesn't look like it's going to hold. Well, it did bounce off. It did chop sideways overnight. And then it broke it. And because we gapped down beneath these trend lines, the market had no chance of taking them back. It was just gone. Now, it's broken those trend lines. So we'll go out here on the hourly and look. And sorry, this is kind of messy. You see this trend line, this big one right here, it comes from all the way. Actually, we'll have to go out to the daily for you to really see this. Looks all funny. Turn that off. Okay. Here's the daily view. All right, this trend line starts right after coronavirus. Okay, April 1st, 2020. And it comes all the way up here. It's this big thick blue line. It hits here along the lows at the beginning of October, right here. And then it comes up, bounced off of it here, 20 December. Fell beneath it briefly and bounced off January 10. And then overnight tonight, we gapped beneath it. And that started this sell-off. Okay, we broke beneath what I assume was a lot of people's area of support, and this bounced back on January 10. That was important, and it just busted beneath it, and we had this big sell-off. Now down here at the bottom, there was the low from January 10, and the 100-day SMA were down here. Always make sure to have those kind of levels on your charts. You're going to need them. Right now, both those are on there. We'll get rid of that. So the question is, does the market fall further? This was a full 5% pullback here. This is a full 5% pullback in the market, right about there. And the question is, does it go further? I absolutely would not be surprised to see a full 10% correction. Okay? Let's look down further. So the low from December 20. Here's our next target, 45.20. The low from December 20th. The low from December 3rd. 44.92, and after that, way down here, 43.20. That's a 10% correction. It's below the 200-day. I wouldn't be surprised to see this 200-day or this 10% get hit. I wouldn't be surprised. I think at a minimum, we go to the low from December 3rd, maybe to like 4,500 and bounce from there. I think at a minimum, that's where we're going. And that's because of all these technical levels we've broken. We've just broke this, broke this, broke this, broke this, broke these, broke that, and now we're finally down here on the 100-day SMA. I zoomed in during the day down to the 5-second level, and I saw no institutional buying on this level. I didn't see anything that would make me think big money was buying. And big money is the ones, big money are the ones that are going to jumpstart this back out of the doldrums. And if they aren't doing it, then we're going lower, in my opinion. Which is fine, which is great, actually, because that will give us really nice directional movement. I'm really hoping that we keep falling the next several days. That will give us fantastic directional movement and let us continue shorting this. And doing like we did today, where I went 6-0. Just an absolutely fantastic day. Let me show you a little bit about the new indicator. So one of the plays was right here. It was on this as it came down. I think this was maybe the second play of the day. Anyway, came down, pulled underneath the curves, so it goes red, pulled under the curves. We can see here, volume looking very bearish. It popped back up briefly, and we know that's our entry on a bearish volume, right? We know when we pull back to the green side momentarily, that's going to be our entry, which it did. It pulled up. We got the alert to go short right here. We did, and we shorted. It popped up briefly, but I held. It wasn't closing above the signal line. And it pulled down, and I took my profits. Let me get pivots here. Okay. And then let me find the next one that we played. I can't remember if we took this one or not. I think we did take this one. I think we did take this and pulled our profits here at the pivot point. This one I know for sure that we took. We got short up here on this alert right here. You can see we were short. We're still solidly in the bear territory. Not really being able to climb over the zero, it gave us a short alert. Went short here, chopped for a little bit, lower, and thump right into the low from January 10. We showed it there, and we took our profits. And then later on, you can just kind of see the indicator here. This one you would have stopped out on, but this one, this was the big mama. Whoosh! That's a beautiful trade. And then we trade a little bit more in here. I honestly, for the life of me, can't remember where they were, but nonetheless, it was a really great day, and that has kind of just been our experience so far. Myself and my clients' experience with the new volume indicator is that it is just destroying. This thing is straight fire, man. Especially when combined with the curves, and now we have candle coloring on the curves to help us find the ATRs that we're in just on a glance, and it's really, really a nice package altogether once you learn how to read this thing. It's fantastic. So that's kind of how our day went. If you want to find out more about that and what we are and what we do, tradersultimateedge.com, and you can read about us, about the company. You can also feel free to email myself personally. It's Anthony at tradersultimateedge.com, and I'll be happy to talk with you. And yeah, that's all I got for you today. Like I said, get these levels on your charts. I'll run through them one more time. You're going to want these levels. All right. The low from December 20, 45.20. The low from December 3, 44.92. And your 10% correction, which lines up with some resistance or with some support from this mid-September pullback. That's going to be 43.20. Those are lines that you're all going to want on your charts. Now, there's others in the middle here, which we'll get to when we come down to it. But I think these two levels are in the cards. I think 4,500 it's in the cards, absolutely. Overnights, the overnights, I would kind of be looking for. Turn these pivots off; they're a little much. I really don't want to open down here because this is where I want to go tomorrow. So I'm hoping what we can do is maybe just chop sideways, come in just under the 100-day SMA, and keep finding this area as resistance, and then so kind of look for this. Let's go to the 15-minute, and this is what I really want to see tomorrow. Let's get 7:30. Okay, that's the market open. So I'd like to see us, come in here somewhere and try and go up and fail, try again, fail, and down she goes. This is kind of what I would really like to see, and short off of this area here, down to this, and then maybe down to this further. I could absolutely see that. That's why if we come in down here, it's going to be tough to go short. It'll be tough to go short intraday unless we get a nice bounce back, because that's already taken up a lot of the move. So that's why I'm hoping we come in up here somewhere. That's fine. We could even come in up here and fall from that level too. That would be fine as well. That 46.09 level, and that's a midday bounce back from Jan 10 which has again proven to be resistance and support. So this is kind of what I'm looking for tomorrow. I'm definitely still bearish. I am not going to be bullish on the overall markets until we recapture and hold 47.40. Really, like 47.40. And I mean, that puts us pretty close to all-time highs. But that's honestly what it's going to take. Until we're back up here and pushing to all-time highs, I am not bullish. I am not bullish. The fear of inflation and the fear of the Fed doing the things that the Fed does is too high right now. If we come over here and look at the 10-year Treasury, 1.866. Look how it gapped overnight. Isn't that ridiculous? Look at the dollar, just been trending upwards. A stronger dollar puts pressure on our markets. The VIX has tons of room to run. It still has plenty of room to go up. We'll look over here. Oil's getting really expensive. We're now up over $86 a barrel. This puts inflationary pressure on the economy. And SPY V, SPY G, value continuing to get bought. Which will put pressure on growth. And growth, the big mega caps, are what's going to drag down the market, specifically the NQ. And if the NQ goes down, I think the DIA is going to kind of go sympathetically, which of course is just going to drag down the ES. So that's where I'm at. And as we fall, I'm not bullish until we see a 10% correction. I don't care where we end up in here and how long we sit there. I'm not going to be bullish until like I see a 10% correction. I'm not. Doesn't mean I won't trade bullishly intraday. I'm talking longer term on the market, more of a midterm kind of a thing. But one thing that we are going to see here is we're going to have fantastic opportunities to get into stock and to get into lots of things long, add into our retirement accounts, our income accounts. So it's really just fantastic opportunities here, and we'll continue to day trade bearishly, and I think it's going to work out great. All right. Thanks, everybody, for listening. I appreciate it, and you all have a great evening. Bye-bye.